So do you want to walk through this? I guess I'll kind of ask, how have you decided to allocate and diversify this portfolio from like a high level? And then I'll ask you each one of those areas as we go, okay?
Yeah, no problem. So as you can see, there's a variety of investment strategies here. I've just touched upon some of the things. So like our foundational investments, you'll see mining, validators, real estate, gold, the stable pools, the bread and butter. They're going to be foundation. They're going to be provides us with a solid return of which then we can build off. So then you've got the likes of trading bots, small caps, very, very volatile, which is why it's got a very small percentage of funds. One thing we're not going to do is over leverage or over risk into high risk assets or protocols. Then you have the likes of Bitcoin. Everybody knows Bitcoin. There's multiple things you can do with Bitcoin, from mining, trading. It's one of the assets. Nothing is stable in DeFi. It's just not. Once adoption takes place, it will start stable out and be less volatile. But at the moment, it's not. But it is the most stable asset that we could hope for. And then you've got AI and metaverse. AI in itself, over the next 12 to 18 months, I believe going into the next bull, AI is going to be the craze. It's already slightly started to kick off, but it's going to get bigger, much, much bigger, and we will take advantage of that.
Okay. Yeah, that sounds like a decent spread to me, and I wish I had the discipline to keep my portfolio this way, but those small caps, man, they lure me in with their promises of a high reward. And anyway, this seems much more balanced in my opinion. I'm not an expert by any means, but this seems to make a lot of sense. Or what platforms do you plan to farm stablecoins on? USDC/USDT, that it's going to be 15% of your portfolio. Can you give us a little more information on what vaults you're going to be using?
Yeah, so there's vaults on nearly every layer one chain has vault available, stable pools available. Across the whole space, there's over $600 million worth of investments into stable pools alone. That's just stable pools that you can deposit money in and pull money out. That's without lockup vaults. That's without other similar protocols to this, where you lock up funds into an NFT or whatever. So there is major potential for stable pools alone. But one of our targets would be new L1s, the likes of Arbitrum, Pulse Chain. What happens when a new L1 comes? They will offer vaults. So if we take Ethereum now, for instance, you can find multiple stable vaults, stable pools. The APR is down at 4%, 3%, 5%, very low. What happens when a new chain launches is they'll increase that APR, sometimes can be 40, 50, 60%, to pull investors on the chain. They get the exposure in there. So that will be a main target for us for stable pools. Get into them stable pools, take advantage of that high APR, pull it back out, put it in the treasury, go again and repeat.
All right. And so you're going to be targeting higher rewarding liquidity farming opportunities on newer L1 blockchains like Arbitrum and Pulse Chain and whatever comes next, right?
Yeah, correct. If you see Arbitrum for now, for instance, it's
I'm over there farming right now. Yeah.
Yeah, it's insane. The TVL go in there at the moment is absolutely unbelievable.
Got in late. I'm like a month late to the party, maybe a month and a half, but I wanted to watch and make sure it wasn't there wasn't some exploit I didn't see yet. So I dipped my toes in a little bit, and now I'm putting in a little more in there. But, obviously, to that party, the higher those rewards are, they're so juicy right off the beginning, and then they taper down over time. But it's still early, in my opinion. I'm still getting the last week or two. It's crazy still.
100%.
Mm-hmm.
It's just insane. The rewards they offer just to pull in, invest just for the exposure alone, can be extremely lucrative. As we touched upon earlier, and you just touched upon again, we will obviously test the waters first. We'll do our due diligence. The whole team are very experienced within DeFi. So we're not just going to throw the money in just because, it's a new chain and they're offering 100%. It's not going to quite work like that. There'll be a lot of work that goes on behind the scenes before we deposit money anyway, but it just gives you a little hint and insider why we'll be targeting them areas.
That's a good answer, because you gave an answer that isn't just like, oh, we're just going to farm right here on this one chain, on this one pool. That's our strategy. No, you gave an answer that's like, here is our thought process. We're going to look for higher yielding layer ones that are established, but still high yielding and fruitful above and beyond the other options. They're going to, chase those as they roll out over the next couple years. So that's an answer that has long-term potential versus just like, oh, I'm going to farm Arbitrum right now, and then I don't know. That's as far as I thought. No, it's Arbitrum, and then we're going to farm the next one, and the next one, and the next one that comes like it.
100%. And as you know, in this space, everything's evolving. Whether it be layer ones, layer twos, everything's evolving all the time. There's always new stuff coming. The good thing is there's a lot of people that are very, very trusted in the space that are bringing new things. So
right.
You're even more confident. Let's take Pulse Chain, for instance. Richard Hart is not going to the chain that kills everybody in the first day. It's just not going to happen. He's got too much respect in the space. A lot of people hate him, but he's very vetted also. So with that kind of thing, yes, still you would do your due diligence, but you can be a lot more confident that you can make that play and you're going to be safe when you make it.
Yeah, I think that's a good strategy. Now, with your Bitcoin, I'm going to kind of hop over to the Bitcoin, because to me, Bitcoin is very, in terms of crypto, is as safe as it gets. In my opinion, it's been around the longest. It's never been hacked or exploited. And it's basically where most people, I think, lock up their crypto long term for a good reason. And you're putting sent into Bitcoin, but you put here so many plays for Bitcoin, from liquidity providing to staking, hodling. So can you expand a bit upon your Bitcoin strategy?
Yeah, so as the words actually say, there are so many plays for Bitcoin. So one of the main coins that we will trade is Bitcoin. It's the safest coin in the market, without a doubt. As it says below, you get some good platforms that will offer great returns on LP staking for Bitcoin, whether that lockups or not. There is so many things you can do with Bitcoin, including miners. I mean, individual miners for an individual person, not too lucrative, it's too expensive. But when you make strategic partnerships that I do, and you've probably seen that, we can utilize other protocols that already have this amount of miners. We can negotiate good returns on their miners, and yeah, we can use that avenue too.